measuring volatility, identifying support and resistance, trend identification, reversal signals, and liquidity zones, all of them in one indicator. In this video, I want to introduce a perfect indicator on TradingView that can effectively help you in trading. I'm going to teach you a very accurate trading strategy based on this indicator, so make sure you watch this video until the end and let's get started. Alright, before we add the indicator, I'm proud to announce that recently I published a book, The Art of Price Action Trading. The link is in the description and you can get it later if you're interested to learn price action trading and take your trading to the next level. Alright, to add the indicator to our chart, here we click on indicators and we search Fibonacci bands. We add this one, which is written by Big Beluga. Alright, this is the indicator, and as you can see, it's overlaid on the price chart. You can see that we have some bands on the chart similar to Bollinger Bands on different standard deviations, but this is different from the traditional Bollinger Bands, and this is actually a newer version of Bollinger Bands that uses Fibonacci ratios for the bands. We have a middle line here, which is a smoothed moving average with length of 20, and then we have these bands which are placed above and below this middle line, and they are based on Fibonacci ratios 38.2%, 61.8%, and 100%. These Fibonacci bands act as a support and resistance level. You can consider them as a dynamic support and resistance levels that are placed around a smoothed moving average line. You can clearly see that whenever the price reaches these bands, we have pausing of the price and then reversal of the price. In some cases, the reversal is just a small amount of price movement, but in other cases, we have larger movements of the price. The point is that when the price is around these bands, especially 61.8%, we have reaction of market participants, and this can help us with trading opportunities, which I will explain it later. The 100% level is considered a crucial level because when the price reaches to this level or goes beyond this level, it is considered rare and extreme relative to the recent price movement, so it is very probable to have reversal of the price. This indicator is a perfect choice for mean reversion strategies where we look for extreme levels of the price and potential reversals. Later, I will teach you a trading strategy, so make sure you watch this video until the end. The middle line, as I mentioned earlier, is a smoothed moving average with length of 20, and it can help us with trend identification. In times that the price is above the middle line, the line is solid and it shows advancing of the price in an uptrend, and when the price is below the middle line, the line becomes a dashed line and it shows decline of the price. So in practice, when we are in the right side of the chart and analyzing the market, when we see that the price is above the middle line, we can say that the price is advancing. The lines and the bands are extended into the future to show us the possible movement of the price. The angle of this channel also helps us with trend identification. When the channel is upward, like here in this part, the market is trending up, and when the channel is downward, the market is trending down. And in times that the channel is horizontal, like here in this part of the chart, you can see that the channel is horizontal, the market is in a trading range and the price is moving flat. So here, since the channel is upward, we can say that the market is trending up. Alright, one excellent feature of this indicator is that it shows liquidity sweep, which happens when institutional traders take advantage of a liquidity zone by placing large amounts of orders. Liquidity describes the extent to which an asset can be bought or sold easily and quickly. In other words, it's all about the availability of buy orders or sell orders in a price range. As I explained earlier, when the price goes beyond the 100% level, it is considered extreme level and it is very probable to have reversal of the price. So at this level, when the price stops advancing, many traders open short position and they would place their stop loss here above this level. because they entered a short position, the nature of their stop loss is a long position. So here in this price range, there are lots of buy orders. So we already have liquidity for buy orders in this price range. Institutional and large traders take advantage of this liquidity to fill their orders. The price just advances to hit all the stop losses, and when there is no more liquidity, the price reverses down. And similarly, we have a sell side liquidity where there are many stop losses in the form of sell orders. Alright, so as I said, this indicator also shows liquidity sweep, and they are shown by the help of a line like this, as you can see here on the chart. When the price closes above 100% level or below 100% level, and after that we get an opposite candle, the indicator shows buy or sell signals by the help of these small green or red circles. And when a liquidity sweep happens, like in this case here, it shows a white line like this, and when we get an opposite candle, the indicator generates a signal. To reduce our risk and only take trades with higher probability, we need to add another indicator, which is RSI. This one, Relative Strength Index, and we use it for more confirmation for entering a trade. When the price reaches to 100% level or goes above the 100% level, we want RSI to be also overbought. We enter a trade only if RSI line crosses back below its moving average line and goes below 70. Here you can see that after the first signal, we had liquidity sweep, and this setup saved us from a losing position. And in practice, we would enter a short position here at this point. This was a short position setup, and for a long position setup, when the price reaches to 100% level or goes below that, here in RSI, we want it to be oversold. We wait for the RSI to cross back above the moving average line, and it should be above 30, which is the case here. So in practice, we could enter a long position at this point. As I mentioned earlier, this indicator is a good choice for mean reversion strategies, where traders look for the times that the price is far above or below the average price to enter a trade, and then they exit their position when the price reaches the average price. Depending on your trading strategy, you can focus on three conditions. First, when the price reaches to or goes above 100% level. Second condition, when the price reaches to red zone or green zone, which is between 61.8% and 100%, and these are also potential areas for the reversal of the price, as I explained earlier. And third condition, you can only focus on the cases where we have a liquidity sweep signal. You don't have them often, but when they happen, you have higher probability of achieving the expected result. But please pay attention that you can have any of these conditions with also confirmation of RSI, but still further movement of the price in that direction and having the price to hit your stop loss. These are all just probabilities, and you can never have a trading strategy with 100% win rate. So you need to manage your risk properly. Otherwise, you will definitely lose your trading account sooner or later. There is a risk management strategy that is called 1% rule, and it's one of the best risk management strategies that you can use. By the help of this risk management strategy, your position size is calculated in a way that you will lose only 1% of your trading account if the market goes against you and hitting your stop loss. For example, if you have a $10,000 trading account, your loss will be only $100, 1% of your trading account. By the help of this risk management strategy, you can limit your loss to a minimum amount so you can protect your trading account from falling significantly. I have a complete guide on this. The link is also placed in the description, and I highly recommend you to watch it, because without a proper risk management strategy, you cannot become a consistently profitable trader. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.